This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. I'm going to give you a stock market update for Friday morning. And man, we've got some movement here. And I know I track the market conditions, and we've got some shifts taking place that I think are critical to what's taking place in the market right now. And then we also have to keep a really close eye and understanding of multiple time frames at this point, because we need to frame it out in multiple time frames if we're going to really have a clear understanding of where this is going to go and what our triggers are going to be. If you're interested in learning more about how to trade in multiple time frames, especially using MACD and ADX, you can go to rabilstockresearch.com, find my courses as well as my individual package where I provide my research, and then also the book. So take a look if you have an interest. Okay, so we're starting with the market sentiment, all right? And what is fairly amazing to me is the drop in the bullish sentiment and the massive increase in the bearish sentiment. Just over the last 3 to 4 weeks, we hit a peak here of around 48%, and we are now at 25. It's basically been cut in half in this 3-week pullback, essentially. So this is a big drop. Now, when you're in a bullish trend, a big drop like this is to me is a bullish sign. We got oversold. We actually hit the 29.75 mark. So I did put this in neutral, but in reality, you could put both of these in the green camp because this did hook underneath 30% and has now turned back up. But I'm looking at it right now, it's at 45%. So I put it at neutral. The reality is there's probably a little bit of a short-term upward bias. Now, keep in mind, right here is where these were both negative. Okay, right? These were negative because this was way up in overbought territory, and this was way up at like a 3-4 year high or something like that. It hit a massive peak in bullish sentiment. All right, so we had that. We've now kind of corrected that back, and now I would say this has turned. I don't know. I probably should have it on this side in the neutral camp, but I put it over here. Leaning towards the right just because of the way this has dropped so quickly. All right, so that's pretty important. Now, what I do want to mention here is the daily momentum is bearish, which it has been, but also the daily trend has now turned bearish. We haven't really inflicted any damage on the momentum or the trend on both the weekly and the monthly yet. But let's start digging into this a little bit because there's some pretty important things to discuss. Number one, look at this massive jump in volatility. Do you see this huge move? Now, we had the precursor starting in February. We started making higher highs and higher lows. You see how we went from making, this was more flat, but we were in a declining phase, and then we flattened out, and then we started to turn up here in February, and we've been basically trending to the upside. Yet we had sort of a dip here, but in reality, the shift was taking place, and I was definitely making that known as I do these reviews. Now, again, that was prior to this drop that we've seen here. Okay, so we want to use these conditions to our advantage, and this is continuing to hit a new high. So I don't know that I would be in any in other words, I don't think that the risk is really dissipating at this point because we're still showing a lot of volatility. If you're trying to trade off of a daily chart with this type of volatility, then I think you're in for a lot of stop outs. And it could be really in either direction just based on the amount of volatility we have. All right, so you got to play the overbought, oversold game if you're going to be doing it on a daily time frame. Now, I go through this in detail in my course, the third course, which I just put out a few months ago. It goes into the weekly and the daily volatility and how to go about it. I give rules as to how to trade around this volatility and how to use the overbought, oversold to your advantage along with the trend. All right, so let's look at the weekly. I think what's kind of important that's taking place is that this is lingering here. We're staying above this line. It's staying flattish. It hasn't quite turned up. If this line actually turns to the upside, then I think I would start to get very concerned about what's going on with this market. Because remember, we get this drop and the volatility goes up. A lot of times it's a precursor to a reversal. All right. We start to see the volatility increase first, and then the market, even if it's rallying and the volatility stays high, it can be a precursor to a reversal. So we want to be on the lookout for this turning up and the moving average turning up. If we have both of these time frames with the increased volatility, then the risk really starts to increase pretty dramatically. So just if you enjoy the content or enjoying the content, please hit that like button and also subscribe. Continuing to try and grow this channel. Let's switch over to the different time frames. I mean, we've got some cross currents. Now, if you watched my Stock Talk show this week, you know that I was focusing in on the MACD in all 4 of these time frames. It is really worthwhile. If you watch this show on a regular basis on Fridays, I would definitely suggest watching. It came out Wednesday. I would definitely suggest going through that because I go through the S&P and kind of what I'm seeing and what was taking place, and we've basically played out as I was trying to describe on there, which is we had overrun on the daily chart. Right. First of all, on the monthly chart, we had kind of a move that got us away from support. We have a little bit of an opening here between price and the moving average 18-month. So there is this area where it just would make sense if we could consolidate some. All right. And then on this time frame, the pullback caused the MACD to roll over. So we're not necessarily looking for a move straight back to the upside. Okay, we should be looking for some type of a W pattern or something like that to develop, which I think would make more sense at this point, especially when you look at what's taken place with this big red bar here. All right. Now, we've got these big earnings coming from companies like Microsoft and Google that are going to influence this morning's price action. Certainly, Meta had a big impact on yesterday's open and the big gap down. It might go the other way based on what I'm seeing in the post price action based on the earnings that they gave. But we'll have to see. You never know how quickly these things can reverse or whatever. But it really doesn't even matter because I'm going to show you how we're going to frame this out a little bit so that we have a plan of action. One thing I wanted to point out is that we had this zero line crossover to the downside, and then we formed a pinch. But if you notice, the pinch triggered off of a gap down. You see, this was this big gap down on the hourly. All right. So what I mentioned on Wednesday's show, my Stock Talk show, is that I'm looking for some kind of a lower high to form because there was serious overrun in the on the MACD on this time frame. So we got overrun on this time frame, okay, which means we're not really looking for a straight up affair. And then we got overrun to this way. So that's why I wouldn't be looking for a straight down affair. Do you see what I mean? We've got to use each individual time frame and the momentum on each of those time frames to tell us what to do. Now, the bias is pretty bad on this time frame, but look at how good the momentum is on this time frame. Do you see how many cross currents we have? We have strong momentum based on this, and we have bearish momentum based on this. We've got a crossover to the downside here, and we have a crossover of the zero line here. These are in agreement that if we're going to turn to the upside, we're going to need to do a little work. This is going to need to push up and then make a higher low. That's the only way I would be willing to play a move to the upside here. I wouldn't necessarily be looking for some kind of a quick crossover or a moving average cross or anything like that, because both of these lines are suggesting this is going to take a little bit more time. We're probably going to move up, hit some resistance, and then come back down. That is where my head is right now. All right. One of the things I did want to mention is that notice how, the stock charts uses the first 30 minutes here for the hourly, and then it switches over. So in other words, the first hourly bar is a 30-minute bar, okay? And then from there on, each of these are hour long, all right? And then if you go, and I'm actually going to pull up OmniBroker, and this is the same as TradingView. Do you notice how this is the full hour? And then this little bar here is the last 30 minutes. So it's done in an opposite fashion, but look at what this caused. Because of the way ADX is calculated, it caused this to actually pop to the upside on this rally. But if you go and you look at way The stock charts software is programmed to use that 30-minute, that difference. You see how we don't have that happening here? So you got to start to ask yourself, now there is a way to correct this. If you don't want to deal with that, you can just go to 65 minutes and that's 6 equal bars, and then it'll always be the same. And you can do the same thing in TradingView if you want, okay? But what I would tell you is that I would suggest sticking with one or the other. In other words, if you use both stock charts and you use TradingView, then pick which side you want to play and then always take the trade based on that. It's not like one is right and one isn't, okay? It's sometimes this will give a better signal and sometimes it won't. So you can't assume that, you can't switch back and forth depending on how you feel. If you feel more bearish and you say, hey, this is not much of a rally, I'm going to get short, even though on the other chart it's showing a little bit more strength. You see what I mean? You have to pick. You have to decide which hourly you're going to play and then always play off of that hourly. And that would be my suggestion. Now, if you want to make it simple on yourself, you don't want to deal with that, the 65-minute is very, very close to the hourly. And I know a lot of people suggest to me that I got to switch, but I'm just so used to the hourly bars. I'm comfortable with it. I'm not going to switch, but it's like the 18 versus the 20. I mean, the difference is so small. If you want to use a 65-minute on all your charts and then they're all the same and you don't have to deal with the differences in the ADX or the MACD or whatever, then you're good. You can do that. Don't worry about it. I just wanted to make that clear. But one thing I would suggest in a time like this is to throw the zigzag on. All right. This is one thing I really like about stock charts. I can pop this on and off really easily when I feel like I want to get some clarity. So I've got this. I can draw in my trend line here. I can see we broke the downtrend line. We created the 1. We created a 2. We've now created the 2 because this is turn up. So I know I've got a 1 and a 2 in play. Now this would be the 3. Now realize what I've said before. This trend is down. All right. So when we're looking at a 1, 2, 3, I want to take the 1, the 2, or the 3 when we're going with the trend on the higher time frame, not against it. Okay, so this is really important. If we cross above this and we're still below these 2 moving averages, or maybe like right at the 18, and we're not getting confirmation, that's not really a good trigger for me. I'm not necessarily looking for that. Now, I might let it break out above and then consider the next higher low, especially if green DI is showing some signs of improvement and maybe MACD doing the same thing, something like that. Then I might have a little bit more interest. But I want to point this out because look at what's happening. Let's just say that this does push up, but it doesn't take out this high. This is right out of my course. I go into this in detail. If we make a move and then we come back down through here, that's a failed bull. That's a failed 1, 2, 3, okay? And this is actually a trigger to the downside, all right? Now, when you look at the moving averages, you can realize what's taking place. The 18 just crossed over the 40. We came into the zone. We actually came through the zone, and now we're coming back out here. So it's essentially a buy signal that would fail if we come back down through this low. Do you see what I mean? So we want to be on the watch for this. This is the key level down here, I think. If we come down through this low, then to me, that's a pretty strong trigger back to the downside, and I think there's a lot more risk. If we come up through here, that's a positive sign, but I don't know that it's actually a buy signal, and simply because we're still in a downtrend on this time frame. So what I was saying on Wednesday on Stock Talk, I still feel the same way. We need to see this strengthen up, and we're going to need to higher low on this time frame. That's how I would feel. Now that means that we probably need to cross over and do something like that on this time frame before we're going to see any real improvement on this time frame. All right, you got to be able to kind of take all this information and break it down by time frame so you understand what's going on. I mean, we don't have a buy signal here. Now, here's the good news. What I've been talking about over the last week, especially with the subscribers over the last week or two, is we've been deciding whether it's a buy or not. And we've been saying, no, not really. It's not really, this pullback isn't a buy. The question has been, do we want to short it? And, with the gap down today, it really kind of took away the advantage of really doing it, off of this little peak here, or this little lower high here. But here we've got another lower high. Now, if we get pushed to the upside, Friday morning that fails and doesn't really take that out, or it does, let's just say it takes it out by a small margin and then it turns back down, then you could consider looking at this. But I still think the safer play is making it take out this low here. Then I think the risk starts to really increase when we put a lot more pressure on this big red bar and the 18-week. But my guess is that we're in for a little bit of some volatility, some sideways action. And during this sideways action, we have to watch the volatility on the weekly. I think that's crucial. All right, that's the update for the week. Let me know if you have any questions.